While you were busy looking at the stock market charts this week, a very big choice was being made. This happened behind closed doors in a city called Basel, in the country of Switzerland. This is not just a rumor or a story someone made up. It is a real set of rules that has been signed and made official. These rules start to work the very second the markets open on Monday morning. The people in charge passed these rules very quietly. They did not want to cause a big panic, but they did it because they know the way money works is about to change forever. If you have any money in a bank, you are a part of this. The group that made this happen is called the BIS, which stands for the Bank for International Settlements. You can think of them as the big boss of all the central banks in the world. They are even the boss of the Federal Reserve in America. They just started the final part of a huge plan called Basel III. This changes everything for everyone. Here is the easy version of what is happening. For 40 long years, big banks have been playing a game of pretend. They acted like paper contracts for gold and silver were just as good as the real metal. They would sell you a piece of paper that said you owned gold, but they did not actually have the gold bars in their vault. They were selling promises that were not true. But starting Monday, that lie stops working. To understand why this ruins the game for the big banks, you have to look at how they count their money. Before today, a bank could hold these paper promises, which they call unallocated gold, and tell the government it was a safe thing to own. It cost the banks almost no money at all to hold these positions. This allowed them to control the price of silver and gold. They could sell billions of dollars in silver they did not even own just to keep the price low. But a new rule changes a specific math problem called the net stable funding ratio. I know that sounds like a boring school word, but please listen closely because this is where your money is at risk. This new math rule makes holding paper promises very, very expensive for banks. It punishes the banks for making bets that the price of metals will go down. It forces them to make a big choice. They must either buy the real heavy metal bars to back up their bets, or they must get out of the market completely. The leaders passed this rule to stop another big money crash like the one we saw in 2008. But by doing that, they started a timer on a big change. Big banks like JP Morgan and Citi cannot hold on to their bets anymore without putting up a massive amount of real money. The cost to keep the price of silver low just became much higher. It used to be free to keep the price down, but now it costs a fortune. We are already seeing the effects of these new rules. Banks are quietly fixing their accounts in the middle of the night. They are desperate to follow the rules before the Monday deadline arrives. This is creating a lot of pressure to buy real metal. It is not just people guessing that is making the price move. It is the banks trying to save themselves from the people who make the rules. But here is the big twist that the news will not tell you. The most exciting part of this rule is how they relabel gold. Yesterday, the people who make the rules thought gold was a risky thing to own, kind of like a stock that moves up and down a lot. Starting Monday, gold is called a Tier 1 asset. Being a Tier 1 asset means that gold is now seen as totally safe capital. It is now treated the same as holding cash or money from the government. Think about what that does to a banker's brain. Before they wanted to sell gold to keep the price low. Now the rules give them a reason to buy it to make their bank look stronger and safer. They are moving from trying to lower the price to trying to hoard as much as they can. When the biggest sellers in the world suddenly become the biggest buyers, the price of gold does not just go up. It stays up. This explains the weird things we saw in the market last week. Do you remember how the market seemed to stop moving? It was like a liquidity vacuum. It was not a computer mistake or a glitch. It was the people who run the market stepping back. They stopped selling because they knew this rule was coming. They did not want to be caught on the wrong side of the trade when the new laws started. They were fixing their computer programs for a new world where real physical metal is the king. And the banks are not the only ones watching this happen. Big companies that make things like Tesla and Samsung are very smart. They read the same reports that the bankers do. These companies know that if the banks stop selling paper silver, the price is going to jump very high to meet the real demand. We are seeing companies rush to buy silver right now because they are scared there won't be enough. It is a big race. On one side, you have the factories trying to get enough silver to make electronics and cars. On the other side, you have the banks trying to grab all the metal they can to meet their new rules. There is simply not enough silver for both of them. The Western countries are finally admitting they lost. China has been doing things this way for months. In China, they only trade real metal that you can touch. They do not play paper games. By passing this rule, Western leaders are admitting that the Chinese way of doing things was better. They are admitting that paper promises are dangerous and that real metal is the only true way to stay safe. So why does this matter to you? It makes the banking system safer, but it also hurts the value of your dollars. To buy the gold and silver they need, banks have to sell something else. They will sell dollars and government IOUs. This puts a lot of pressure on the dollar to go down in value. It is like a seesaw. As gold and silver go up in value to become safe assets, the power of the dollar must fall. The rising value of gold is the falling value of your savings. There is a specific danger if you keep your metals in a bank account. If you have an account where the bank just promises you silver, you are in a bad spot. The bank now has a reason to close your account. Holding your promised silver is now a problem for them. Do not be surprised if you get a letter next week saying they are stopping their metal program. They might just send you a check for the cash value. They do not want to hold the metal for you anymore because they need it for themselves. You will not hear about these boring math rules on the nightly news. It is too technical for them, but this is how the whole money world works. The media will scream about prices moving around, but they won't tell you the real reason why. The reason is simple. The time of paper promises and fake money is over. The time of real things you can touch has begun. Last night, the era of infinite borrowing ended. This is a huge moment in history. It is just as important as the year 1971. That was the year President Nixon stopped letting people trade dollars for gold. In 1971, the government moved us away from metal. Now, over 50 years later, the people in Switzerland are moving us back to metal. It is a giant U-turn. It is a slow and boring return to a gold standard, even if they don't call it that. The leaders of the banks are not stupid. They know that the world has too much debt. They know the system is shaking. So they are preparing the lifeboats, and those lifeboats are made of gold and silver. Because the banks are stepping back from their games due to these new costs, we are finally going to see the true price of things. This means the price that things should be in the real world. In the short term, things might look like a mess. We might see prices jump up and down as people who made bad bets try to fix them. No w długosrocznej perspektywie, but in the long run, the trend is set. The price must rise. The price has to reach a level where the amount of real metal matches the amount of people who want it. That price is much higher than $85. No, there is a catch. This rule change hits your wallet in a way you might not expect. Because banks have to keep more real money, they will have less money to lend to people. This rule change will cause a credit crunch. Starting Monday, it will be harder to get a loan for a house. It will be harder to get a loan for a business. The money tap is being turned off. This makes the economy slow down, but the government will not let it crash. They will print more money to stop it from falling. When the economy slows down but the government prints more money, you get something called stagflation. In that kind of world, you do not want to own stocks or bonds. You want to own silver. Silver is the best thing to own when the economy looks like this. The smart thing to do is to copy what the banks are doing. If the banks are forced to hold real metal, you should hold real metal too. If the banks are getting rid of paper promises, you should do the same. Do not bet against the people who run the game. The wind is blowing toward real, touchable things. They passed the law. The rules have changed. Monday morning is a new start. The banks are rushing to follow the rules. The people who bet against silver are trying to get out. The physical market is getting very tight. This is not a made-up story. It is a big reset of the rules. The paper game is over, and the real game has begun. But there is a trap here that the banks accidentally made for themselves. It is a situation where following the law can actually make a bank run out of money. I will explain how that works and why it forces the government to print trillions of dollars. But first, you need to understand the London loophole that just got deleted. For many years, the big gold market in London had a secret cheat code. This cheat code allowed paper gold to be counted as a high-quality asset. It was like a magic trick. It allowed banks to lend the same bar of gold many times to different people. It was a giant tower made of paper. Basel III deletes this cheat code. It says that for an asset to be Tier 1, it must be real and sitting in a vault. No more IOUs. This forces the banks in London to scramble to find real metal. When London starts asking for real gold to meet these new rules, the gold will disappear from vaults faster than we have ever seen. The entire $100 trillion world of money bets depends on this. By making banks hold better things like gold and silver, the new rules make trading very expensive. We expect to see a huge event where people stop using so much borrowed money. Big funds that use cheap money to bet against silver are in big trouble. The banks will no longer lend to them at low rates. They will be forced to close their bets. This will cause a short squeeze driven by the bank rules, not just by how people feel. The richest people and groups already know this. Big funds in the Middle East and Asia have been getting ready for 2 years. They knew that once gold became a Tier 1 asset, its value would have to rise. Now that the rule is live, expect them to tell the world. When a fund with $1 trillion moves even a small part of its money into silver, the market explodes. And while the rules focus on gold, silver wins too. They are like brother and sister. They move together. As gold becomes real money again for central banks, silver becomes real money for regular people. The gap between their prices will get smaller. Investors will see that silver is just an undervalued version of the new safe asset. We are watching gold and silver become real money again, right before our eyes. Now, let's go back to that trap I mentioned. Even though these rules were meant to make banks safe, right now they make them very weak. Many banks do not have enough real metal to follow the law. To get it, they have to buy it from the market. But their buying makes the price go up. And since they still have bets that the price will go down, a higher price hurts them. They are trapped. To follow the law, they have to destroy their own business. This creates a loop that can make a bank go broke. The government will likely have to print money to help them buy the gold they need. This is very inflationary, which means prices for everything else will go up too. This also shows a big fight between the leaders. One group wants hard money like gold. Another group wants digital money that they can control. The regular banks want gold to survive, but the central banks want to control your spending with digital money. In this war between the big bosses, you can actually win. You win by holding the one thing that both sides want, real metal. With these new rules, the inspectors are coming. They are going to open the vaults to make sure the metal is actually there. We think that for years, banks have been counting the same gold twice. It is like renting a car and telling the bank you own it. That is a lie. When the inspectors arrive this year, the double-counting lie will be found out. A bank that cannot prove it has the metal will either be shut down or will need the government to save it. The demand for real bars of metal is about to go through the roof. And don't forget the people who mine the metal. This rule change gives them a reason to stop selling to the public. They will sell directly to the big banks instead. If a big bank needs 50 million ounces to follow the rules, they will just call the mine and buy everything they dig up for the whole year. This leaves no supply for companies like Apple or Tesla, and none for your local coin shop. The squeeze on the regular person is going to get very tight. The banks are going to keep all the metal for themselves to save their own skins. The rule officially starts Monday. The whole plan will take a few years to finish, but the market is like a time machine. It starts changing prices today based on what will happen in the future. Smart people are not waiting for the final deadline in 2026. They are getting ready right now. By the time the news talks about this in 2026, the price of silver will likely already be very, very high. The time of paper games is ending because the regulators forced it to end. Basel III is the spark that forces the system to be honest. And honest money means much higher prices for gold and silver. The banks are buying. The countries are buying. The big question is, are you? History repeats itself. In 1933, the government took gold to change its value. In 1971, they left gold to print unlimited money. In 2026, they are bringing gold back to save the system. Every time the rules change, money moves from one group of people to another. The people who held paper lost everything. The people who held real metal kept their power. This rule change is the sign that the cycle is turning again. The system is admitting that paper money has failed. They are running back to the safety of real things. Why are they doing this now? It is because prices for things like food and gas are staying high. The bank leaders know they cannot fix this without crashing the whole economy. So they are changing the definition of what is safe by making gold and silver Tier 1 assets. They are creating a new anchor for the money system that can survive 10 years of high prices. If the banks are protecting themselves against high prices with metal, you should be doing the same thing. For 40 years, government bonds were seen as the safest thing in the world. The new Basel rules change that. By making gold just as important as bonds, the leaders are admitting that bonds are no longer perfectly safe. This causes a huge shift. Trillions of dollars will move out of the bond market and into the metal market. We are talking about an amount of money that is hard to imagine. If just a tiny part of that money moves into silver, the price could double in one night. You have heard people talk about a global reset. This is it. It is not a big explosion. It is a series of boring rule changes. Basel III is a main part of that reset. It puts gold back at the center of the world. This moves the world away from a system based on the US dollar and toward a system based on real assets. This makes things more even for countries like China and Russia that have a lot of gold. The document is signed, the rule is active, the banks are already moving. The window to get in before the big banks buy everything is closing fast. Once the banks really start buying, regular people will be priced out. Do not wait for the news to tell you what to do. The news is written by the same people who want to buy your silver for a cheap price. Look at the rules they passed. Follow the money. Watch what the banks are buying, not what they are saying. But Basel III is just a shield the banks are using to protect themselves. You also need to know about the weapon they are building to take away your privacy. While they save their gold, they are building a new digital trap for your bank account. It bypasses the regular banking system, and it is very scary. It is called Project Icebreaker. This new digital money is designed to lock you in and watch everything you do. You need to learn how to opt out of this system before it goes live and changes your life forever.